Good day, everybody. I trust you are well and welcome to this 15-minute punchy live trading profit. So trust you are all doing well and you are in the market. I'm presently just watching a few things. Nothing has set up. I was in a few trades earlier on. So I'm watching UK 100, Hang Seng 50, Euro versus the dollar, German 30, S&P 500, and the yen. Nothing is set up. The UK 100, if you watched it, interesting start to the day, huge bull acceleration, managed to pick up a couple of bucks there, so good so far. Anyway, let's have a look at what I have for you. This was Hang Seng 50 earlier on this week. Now, I use the gray rectangles just to indicate low probability trades. So when you see LPT, it's a low probability trade, and I'll explain to you why it's a low probability trade. You're going to have to make the decision to take it or not take it. Open of the day, beautiful wedge that formed from the US session. Remember, I said you always need to look at the previous session. So if you trade in the Hang Seng 50 morning session, the US session is a huge influencer. And right now, we're into the UK session, so you ought to have looked at the Asian session, key levels, etc., etc. So wedge at the open, gap up, big problem for the bears. You know, why would you have a bear candle after a huge gap up? But if we look to the left, the bears came in at the formation of the wedge top and they sold off there. So you got to kind of wait to see what information you get. Then we had a couple of bull candles. This was a bull breakout. The problem I had with it was that failed breakout above the high of yesterday. That's a big problem. The bulls are strong after gapping up and having that micro double bottom reversal. At least give us a close above the high of yesterday. The fact that we had a huge tail at the top, this means that the bears sold all the way. The tail is greater than the body, so it's more than 50% of the candle. So bears were strong, and that blue line was a long-term resistance level on the daily, and that's a high of yesterday. So quite a good level of fighting taking place in there. Then good bear follow through, but we'll just come back to create a micro double bottom. Two candles, micro double bottom, but we have a bigger double bottom here. First three candles, those two candles, double bottom. So good for the bears. Is it a legit breakout pullback high one? It is, but the problem is you've got that tail and you've got the high of yesterday. So if you're going to take that, bear in mind, it's a low probability trade. You have to price it correctly. And if you're starting off morning session or very first trades of the day, I always recommend go in at 0.25%. The technical level would have been here, which is a bit deeper than the measured move of the first candle. So you take your trade, put the entry in there. I was explaining to one of the traders who was with me in the Wednesdays at the market this morning that one of the things to do when you're taking a low probability trade, one of the things that I do, I price it correctly. That's the risk level. So if I work out that at that risk level at 0.25%, I should be trading 5 lots, for example. That's the order I'm going to put. What I'll then do, because a low probability trade, is put my stop here. I've priced it correctly, so I'm still only trading the 5 that I can at this stop. But I put my stop here because if I'm wrong and the market turns, I'm not going to wait to get stopped out. But I don't go and price it for this stop and then put 10 points. Then you're doubling your risk. Trust that makes sense. We then had an attempt to, we had a breakout by the bulls. So remember this tail, try to break out, tail on top, tail on top. Eventually, we created the wedge top. So one of the things that I mentioned in the course that we had on Saturdays, that is, the price action traders, we need to think like craftsmen. We need to be saying what could possibly be taking place. So when this is formed and that's formed, you should have a line that kind of goes up here to say maybe there will be a wedge top. And where will the wedge top be? Might be at the measured move. So this pattern that we had So before we had all of this, a little trading range here, fell breakout and the double bottom. The bulls are strong, they want to get to the measured move. So I kind of was thinking, well, if there might be a move up to the measured move. Let's see if the bulls are strong enough to get there with the breakout and then a pullback, and then let's see what we got. Instead, we got a wedge top at the measured move. In here, we had a pullback. So this was a breakout pullback. Although we had tails on top, we'd follow through, breakout pullback. You can take that trade again. You're taking that as a low probability trade. And that's because of the structure that we had earlier on. So if you're taking that same thing, you got to price it correctly. That's where your stop has to be technically. And you can put your stop here in case you get stopped out. Okay, that makes sense. You always have to price things correctly. And then you put your stop just being the high of yesterday, because if you're wrong, you don't have to wait to sit to get stopped out here. Why is it a low probability trade? Well, it's because of the weak breakout above the high of yesterday. Also, we already gone past, we had the 50% pullback and the 200 extension. The full measured move of this trading range does not give you a one-to-one. So the distance from here to there, if the bulls can't get past the measured move, that's probably 1/3 return. So you got to decide whether you want to take that or not. Usually scalpers are taking these trades, they're just getting it out 1,000 times a day. It all ends up. Wedge top, remember what we said, when you have a wedge top, when you have a pattern that you've seen, then you need to see a lower high. So if you're going to take the trade, you need to see a lower high. There is the first lower high, but you don't take that lower high. And the reason you don't take that lower high is simply because since the open, this is the first time we've had a close beneath the EMA. And we're using the 10 EMA as an indicator of strength of trend. So that's the first close. So just give the market an opportunity for the bears to show they're strong. We close beneath it, we go sideways, trading range, bulls try to break out, we create a double top. Perfect opportunity for you now to jump in and sell, because there was the wedge was the pattern, the reversal pattern. The lower high was a signal, but we didn't take it because it's too early. You need to see the bears staying beneath the moving average. Then when you get that, you take the trade beneath that bear candle. The doji is a little bit low probability. Wait for the bear candle, and you're selling just as this candle starts to get beneath the moving average. Then, so here, of course, you do a measured move stop. So your stop is there. When we start to accelerate, you can tighten the stop down to here. Break out beneath the low of the high of yesterday. Now, interesting, this took place as the market opened. So remember, Hang Seng's got the morning session, absolutely beautiful moves. It's got the afternoon session, the middle session, if you like. There are some moves, but I see a lot more dramatic moves in the open and towards then in the later session, which has just opened about an hour or so ago. But in any case, doji at the open, so not good for the bears, also not good for the bulls. We then went sideways. Inside candle is a reversal pattern favoring the bears. Doji. So doji price action, trading range behavior. Tried to bulls tried to break up, came off the EMA again, a doji candle. It is a legitimate breakout pullback low one, so you could place your order beneath here to take a trade. Low probability trade because of the doji, and you know where your stop should be is up there, so you price it correctly, and you can have a tighter stop placement, but for the correct position. Then you are rewarded with a bit of selling. I want to just work through another chart very quickly. UK 100 yesterday. So if you were in at the open, again, here's a nice, remember we're looking for reversal patterns, breakout, pullback, high one. Problem with this is the doji candle, but the breakout was pretty good. So you can put an entry above that, stop down here and see how far we go. When you get that kind of pullback, I just get out. I'm not going to wait to see what happens at the EMA, because after such a huge bear candle, the market should at least be going a little bit further. We failed, created a double top at a key level, which is coming from the US session and the daily stuff. So there is a decent enough setup for us to look for a reversal. Then after that, you want to see a lower high. We don't get a lower high to trade. We get a bull candle here, so that's not a good setup to take. So best to wait. What we then get as far as the bulls are concerned, they're seeing this as a higher low. And then here we have a higher low, double bottom, higher low, wedge bottom, 1, 2, 3. And so there is a pattern for the bulls to trade. There is a signal. So same thing, see the pattern, wait for the reversal, didn't get it. See the pattern here, there is a higher low, you can take that. If you've taken that, your stop is a little bit tighter. And of course, there is the first point of resistance, would be good enough for a 1-to-1. If it turns here, you exit, or you take your take profits there, and then wait to see what we get. We then get a wedge top, failed breakout above this key level, so that's not a trade to take. You wait. There is a reversal pattern for us. Nice wedge, 1, 2, 3. Many things here. So it's a wedge top. It's a failed breakout above the high of today. There is the high of today, or there, that becomes the high of today first. So there is a breakout, okay? And from the breakout, we have a wedge top. So this whole pattern is a failed breakout above the high of today. And not just the high of today, which is that, but also that double top that was created and that micro double top, that's a failed double top. So it doesn't matter what you call it, wedge top, double top, as long as you've seen nested patterns upon each other. Reversal pattern, if it's solid, the bears will accelerate below it. So they did accelerate. Then you're looking for a lower high. The first one, doji, inside a doji, best to wait. There is another lower high made of dojis. Good to take that trade, and you can put your stop above there. Alternatively, you can wait and take that trade. Doji bull candle, so your stop still has to be up there. You could consider these low probability trades, but after the double top, failed breakout, wedge top, good acceleration by the bears. I mean, this is a pretty strong pattern. You've got to find ways to get in. If you didn't get in, remember the purple rectangles from our course. The market at some point where I said, oops, market is going low. It is always short. Do I jump in anywhere in here? It might have been stopped by these levels. But when you get the breakout, the pullback, the lower high double top. So there is a pullback. There's a lower high wouldn't have been triggered in. There is lower high double top at the EMA. You would have had to jump in there. Let's put a stop above the breakout. If you didn't take that, then you have to wait. The next pattern that came, this little pattern here, higher high double top, it's also a lower high. This candle here is lower double top to that. It's all happening at the MA, or you could consider it a micro wedge pullback, 1, 2, 3. So sell beneath that. And later on, take your profits, wedge bottom. This line is here, session, a level from the US session. Wedge bottom, we have a converging triangle, which we said is a breakout mode. Breakout above it, pull back. There is a breakout pullback. I want, if you want to take that, you take that next trade. Remember what I said, there is no noise on the 5-minute chart. Everything is information. The key to trading, or there are many keys. One of the main keys is just to be patient. You have to sit patiently for the patterns to set up. And when you see the pattern, there is a pattern, there is a pattern, there is a pattern, then wait for the signal and jump into the market. All right, guys, thank you very much. Right on the dot for our 15-minute punchy live trading profits. I will see you later. If you are on the Wednesdays at the market, see you in the US session. Otherwise, we'll see you next week. Marlon, thank you very much. We shall catch up with you. Bye-bye.